Debit card transactions are currently limited to 5,000 yuan per day. People are frustrated that they can earn money but cannot spend it. They are all becoming cogs in a planned economy. The worst thing is that the 5,000 yuan cap applies to all the off-counter transactions, including online banking, mobile banking, online quick payment, sales terminal POS machines, ATMs, and payment platforms such as Alipay and WeChat. People say we cannot live like this anymore. Netizens have confirmed that even their salary cards, which are obviously debit cards, have a limit of 2,000 yuan imposed by their banks. A social media influencer had his card frozen due to exceeding the 5,000 yuan limit. Completing a purchase for a mobile phone on the largest Chinese online shopping site Taobao requires installment payments. Buying a car requires endless trips to the bank. In the case of illness and the need to stay in hospital, a deposit of at least a few thousand $US is required in advance. Making an appointment with the bank to get the cash out takes time, and by the time the money is in hand, the ill person may have already died several days ago. Many online forums are expressing frustration and criticism towards the Chinese government for mismanaging banks and scrutinizing the wallets of ordinary citizens. Netizens said, "We earn our own money, but we cannot spend it freely. Whose money is it? Who has the final say?" A Chinese lawyer stated that this practice violates the rights of depositors to do what they want with their savings deposits. When people are forced to manage their money according to the will of the authorities, it amplifies the control that they have over their citizens. Over time, people's money may unknowingly stop belonging to them and instead become assets of the mastermind behind the scenes, turning them into cogs in a planned economic system. Unfortunately, this is not an unexpected situation. Especially in today's consumer-driven society, Chinese people's behavior can be monitored through their assets, spending habits, and financial management. All domestic cash is under the supervision of the central bank. The ultimate goal is to ensure that money remains within the country and does not flow out. Both domestic and international capitals are engaged in a fierce game of chance in China. It's like a casino where the RMB is the chip and the Chinese economy is the game. In a casino, when you are done gambling, you can exchange your chips for money and leave. However, with the continuous strengthening of currency controls, gamblers in China's casino can no longer exchange their chips for money or leave the casino. China's semi-marketized economy is moving towards casino capitalism, and the big shots in the casino are about to start harvesting gamblers collectively. That is the real situation on the ground. But bank staff are telling a different story. They stated that this policy is in place to prevent scams. With this limit, scammers can only cheat customers up to 5,000 yuan at a time. Someone spoke up saying, "If you impose these restrictions on us and we get deceived again, will you be able to refund us the money?" Obviously not. So who will suffer the most from the recent 5,000 yuan limit policy? Obviously, those who the CCP wants to target. It is common for private businesses to deposit non-invoiced earnings into personal debit cards to evade taxes without reporting them. The Chinese government used to have relatively loose supervision regarding this, but now they are taking stricter measures to regulate debit card accounts. Putting a 5,000 yuan daily cap on debit card makes it difficult to deposit or withdraw large sums of money. Instead, one must go to the bank to complete the transaction. This way, the government can identify who the individual is and what they are doing. Furthermore, business payment deposit into personal accounts on WeChat and Alipay are already banned, leaving little room for tax evasion. But why is the Chinese government not being straightforward? Why do they always make it seem like they are acting in the best interest of the people? One word: power. In order to maintain their power, the CCP is capable of doing anything, but that's another topic. Today, we will continue to discuss the Chinese government's control over cash for Chinese businesses and individuals. In fact, the Communist Party had already begun to control cash before this epidemic, but now this control has become even more strict. At the end of 2019, a cash control pilot program was conducted in Shenzhen, Hebei, and Zhejiang for a period of 2 years. For transactions exceeding 500,000 yuan, the enterprise must go to banks and various documents are needed. Restrictions for individuals ranged from 100,000 yuan to 300,000 yuan depending on the province. If the amount exceeds the threshold, personal information must be provided to the bank and recorded at the local public security department, tax department, and local court. In the summer of 2020, the central bank released a circular to trial the implementation of large-sum cash control nationwide for 2 years. The Central Bank of China stated that the program's goal was to prevent corruption, tax evasion, and money laundering while aligning with international practices. In China, many cases of corruption, tax evasion, and money laundering were conducted using cash. Corrupt officials were reported to have special rooms in their homes to store cash, gold, and US dollars that couldn't be transferred through bank cards. Many countries around the world are also limiting large cash transactions. For example, US bank tellers are required to report transactions exceeding $10,000 to federal authorities. However, Chinese official documents only reveal 30% of the story. What about the remaining 70%? What were the real intentions behind issuing this policy? Let's analyze it together. Experts recommend implementing this program to prevent bank runs in small and medium-sized banks in China. In October and November 2019, rumors of a financial crisis and impending bankruptcy caused runs on 2 small banks. With China's economy slowing down to a 30-year low, many companies that borrowed from banks are unable to repay their loans due to poor performance or declining profits, resulting in a high number of non-performing loans. In the near future, more small and medium banks may be at risk of runs. This policy limits large cash withdrawal, easing the pressure on small and medium banks. Aside from preventing bank runs, this policy has other benefits. First, it aims to increase tax revenue. Much of the cash transaction may be unreported income that does not enter the banking system. As a result, it cannot be taxed as personal income, leading to invisible losses in fiscal revenue. After implementing regulations on large cash deposits and withdrawals, off-bank payments will decrease and the government's tax base will increase, thereby easing fiscal difficulties. To increase bank funds is another reason. Forcing more transactions into the banking system allows banks to lend out more money, earning profits and providing loans to the government for infrastructure and local bonds. This benefits both banks and the government, achieving 2 goals at once. Exerting economic control over individuals is also one of the CCP's policy goals. If an individual does something the government does not approve of, or if the government wants to get rid of someone, their money can be frozen, leaving them with no choice but to surrender it. Furthermore, this cash control policy can prevent wealthy individuals from withdrawing cash and transferring it overseas through underground banks, thereby preventing capital flight. The above refers to the regulation of large sums of money. By October 2020, control over cash have been restricted to smaller amounts. The State Council of China launched a nationwide campaign called Operation Card Blocking to prevent criminals from accessing information and money. This campaign has been noted by professionals in finance and law. As a result, many bankers have made it more difficult for customers to transfer or withdraw money online. A small business owner shared their experience with a Chinese media outlet during operation period. They needed a large sum of money for their business, but their China Merchants Bank debit card only allowed withdrawals of 5,000 yuan per day. When they requested to withdraw 1 million yuan in 1 day, apart from their ID and bank card, the bank requested their property business contracts for review. Even if the withdrawal was approved, the approval will expire by the next day. The owner had to repeatedly return to the bank. Despite the disruption it causes to people's lives, authorities have little regard for this. They argue that card blocking operations have reduced the instance of online fraud, preventing losses, and stopping money laundering activities. If it affects people's normal commercial needs, so be it. The 2020 version of cash control underwent 2 years of testing. However, less than 2 years later, the government introduced stricter controls. Beginning on March 1, 2022, Cash deposits and withdrawals over 50,000 yuan will be subject to nationwide review. Personal information, the source of funds, and the purpose of a transaction must be reported. The government implemented these measures under the pretext of curbing corruption and preventing money laundering. If someone makes 300,000 yuan from a business deal and need 100,000 yuan for expenses, the bank will require business contract to confirm that the money was legally earned. Additionally, one will also need to explain the purpose of the withdrawal. If one intends to purchase a car, a purchase agreement will be required for verification. In this manner, the bank creates endless difficulties for people, encroaching on privacy and leaving many frustrated. This regulation applies to both withdrawing renminbi and exchanging foreign currency. While individuals are allowed to exchange up to $50,000, in practice they can only exchange $10,000 at a time. The individual must clearly explain the source of the funds and the purpose of the exchange. They must also specify who the US dollar will be transferred to and provide proof of that person's identity. The purpose of these requirements is to prevent US dollar from leaving the country. When purchasing securities, stocks, or investing in funds totaling $7,000 or more, a clear explanation will be required. Similarly, when selling assets to liquidate $7,000 or more, the same questions will be raised. In this way, one's spending is tightly controlled. While people can earn money, they cannot freely dispose of their wealth. This is like returning to a planned economy or slave system, where one has no autonomy over one's finances. In reality, most Chinese citizens have limited financial resources. After 3 years of epidemic control and business closures, many small businesses and vendors are struggling, and unemployment rates are increasing throughout the country. Inflation is also on the rise. The situation is already dire for ordinary citizens. Implementing policies that further burden them in this way is unacceptable to many Chinese citizens. Where is China's money? Does the Communist Party not know? Over the years, every corrupt official arrested has been found embezzling hundreds of millions or even billions of dollars. After so many years, Chinese officials have taken most of the country's money, yet they dare to publicize their own assets and instead brazenly investigate ordinary people's funds. The policies implemented by Chinese officials are considered unconscionable by many. With high inflation, 50,000 yuan is no longer a large amount. For small businesses and vendors, this is the typical amount needed for daily operations. With so many restrictions in place, how can they make a living? This policy will impact the livelihoods of many people, yet the authorities do not seem to be taking this into consideration. As the saying goes, those who formulate policies in China have nothing to do with policy implementation. Those who set the rule to review 50,000 yuan likely have no concern for such an amount. They may have tons of cash at home and do not understand how important the free flow of 50,000 yuan is to ordinary people. Their actions are infuriating to many. The impact on ordinary people is huge. Why does the Communist Party create so many obstacles for a mere 50,000 yuan? What are they trying to achieve? If the authorities treat ordinary people as non-entities, everyone will give up, and the economy will collapse. Can the Communist Party's governance continue then? The key feature of an economy is circulation. The most important thing for circulation is the free flow of money. If even this is tightly controlled by the CCP, how can China's economy thrive?